Hi, I'm Kiran Patankar. I'm President, CEO, and Director of Maple Gold Mines. Maple Gold is a Canadian exploration and development company focused on advancing our district-scale, 100% owned gold projects in the Abitibi region of Quebec. It's Canada's premier gold mining jurisdiction. Delighted to be here today, Matthew.
I'm delighted to see you. How are you, sir? You
Awesome.
good?
Yeah, really good.
This is buzzing, right? So there will be a bit of noise. People will complain about the noise, but that's
Noise is good, actually.
Noise
right?
is good.
It means people are around and
Correct.
they're paying attention and getting work done.
So lots of meetings, good meetings.
Yeah, productive. I mean, it's always good to be back here in Quebec. It's where we're focused in terms of project, in terms of community, in terms of everything that we're trying to do. And we've been a founding sort of participant in this conference from its beginning and watched it grow.
Yeah.
It's not just, it's obviously a credit to the team that's built it, but it's also a testament to what's happening in the commodity space, particularly in the junior mining space. There's a lot of junior companies here and some pretty big senior companies, including our partner here with a big presence.
I think you may be referring to Agnico Eagle.
Maybe.
I don't think they were here last year, but they've taken 6 booths, which is a lot of land grab from them. They're here with some intent, it looks like. Actually.
Well, listen, they've been one of the best performing resources companies. They've overtaken Barrick and Newmont, and it's because of smart decision making and great execution. Right? Yeah. It's an incredible model for junior companies like us to follow. It's a benefit to Maple and Maple shareholders to have the strong partnership that we have. Obviously, a lot of work has gone in over the last 18 months to sort of redefine, but also strengthen the partnership that we have with Agnico, and it's amazing to see such a strong presence here. I mean, they've got a major base of their operations and their growth and their cash flow is coming from Quebec, and those are decisions that they would admit they made 20 years ago, right, to focus in the province. So I think it bodes well for companies like us that are focused here,
right,
and ones that already have their blessing and vetting and continued partnership.
It's what struck me was that they brought different teams to focus on different parts of Canada and different functions, right? Because they're sitting on a lot of investment, like over $1 billion worth of investment in various companies, and you kind of feel there's some sort of either some consolidation concept coming up or a view as to where they really, because they're throwing cash after fun at the moment, right? That's the thing. So as a partner of yours, what are you guys talking about? What do they want to see from you? Is it steady as she goes because you know what you're meant to be doing? What do those conversations look like?
Well, listen, as I said, building a business model, whether it's Sean Boyd's ethos, which is, whether you're building a $10 million company or $10 billion company, you build them the same way. Right. You focus on the things that are real value drivers. As we and your audience I've discussed with you in the past, Maple in the last 18 months, we've transitioned Maple from admittedly a stagnant and somewhat bloated company into an innovative, efficient company.
Before you arrived, let's be clear. Well, before you took charge.
Yes, true, but that's what I'm saying. We've transformed that over the past 18 months, and again, it certainly helps when I say we've strengthened the partnership with a great producer and a great company in Agnico. It's because there is a fundamental understanding. I'm putting my years of experience of working with that team, understanding the way that they think, the way that they do things. And again, we have other shareholders as well. I mean, they're our largest shareholder. I'm a big shareholder of the company, right? We have other institutions but I think all things being equal, if we are doing well by our partner, we are doing well for shareholders, right? Yeah. Because their quality filter, when they have this many companies they're meeting with, I think they're the partner of preference, right? For people would love to be, to see investments coming in from Agnico or to see, partnerships and other things. And we were admittedly on the precipice, right? With the lack of results, the spending, the things that were, plaguing the company before my arrival. So I look at this and say, I mean, I came in with a strategy. We have a team, which is amazing. And we built that team, we've kind of cut where we needed to. It was less like a Doge situation and much more surgical on our side, where we really saw when you can bring, as we put out our financials right after we put out the drill result, which is the last time I talked to you, and I want to get into some of that as well. But our G&A is down 46%, and we run the company for $150,000 a month, but we're delivering better results, right? And that's really where our partner takes notice, shareholders should take notice. And again, it's still early for us. We've bounced off the bottom and we've doubled our share price in 6 weeks, but it's still, there's more coming.
Right. But let's talk about the financials then, because it's a nice setup for where this is going and how you're approaching it. So if you want to kind of give us the top line numbers there.
Yeah, I mean, we reported our Q1 with 5.4 million in the bank. We've subsequently received money back from Revenue Quebec. I mean, as I said, Quebec is a preferred destination because we're participants. We met with some of the government officials from the Plan Nord, which is looking at northern Quebec development and supporting Indigenous communities. Had the privilege of meeting recently with our First Nations partners, and so everything's integrated, right? So we're reporting financials. We have a strong balance sheet. We're efficient. As I said, $150,000 a month of G&A, cash G&A, which is a significant reduction from where it was. But we're not wallflowers, right? I'm not what you would call an introvert. So when we have news, we're out talking about it, and you can see that reflected. Again, I'm transitioning from the financials to kind of the market and the response. But we've traded 30 million shares since we put out our initial drill holes from a 12,000 meter program in April. And that's a significant increase, right? On an average daily basis, we've gone from trading 150 or 155,000 shares a day on the venture to trading over 600.
Well, let's talk about that, because I think it's important. Right, there was a base level from which you were starting, right?
Yes.
I know you want to grow it and you want to improve it and all that sort of stuff. So talk about that drill program and what you were aiming for and why the markets reacted like they have.
Yeah, I think what was clear from the outset was there was a strategy. It was driven by utilizing all the available technical data. It took us a year. I remember presenting at this conference last year, and people came up to me after the presentation. We hadn't put out any drill holes, but we had talked about a new philosophy of changing the culture and looking at a complex project with a wealth of data and coming up with a model. Okay. Now, we had other things we needed to do. We needed to restructure the joint venture. We needed to raise capital, and sufficient capital to allow us a nice balance of risk, reward, and when we approach drilling, not just drilling the twinning holes or going with the low-hanging fruit, but really doing what I think is important in this market, but also for our investors, is we've always believed, as has our partner, that there is more. We're just scratching the surface of the potential of the Dewey project and the land package. So we went after some of these bigger step outs, and we delivered on a big one at hole 338.
But you're under the watchful eye of Agnico and Eagle, right? You've got to do this properly. There are no shortcuts. There are no headline grabbing activities. You've got to do this properly.
Yeah, we have to do it properly, but I think, again, with the benefit of a good partnership is that one party isn't telling the other what they should do, right? I think the onus of running the company properly, spending capital efficiently, doing focused exploration, disciplined, capital allocation, prudent capital allocation, and good governance, that always falls on the company. That is something that I came in to fix. And as we hit those milestones, it's slower. If we were a fresh company out of the chute, I mean, we've seen this with some companies that are coming out and they're just delivering new results, but it's a brand new company, maybe a different capital structure, fresh face, and the market just goes crazy, right? And, drill hole plays with Torquay Drilling are, 60, 70 million. We're sitting at a $40 million market cap as of this morning, $8 an ounce, right? Which is still below the peer group. But when you look at ticking the boxes of everything, I mean, one of the things that I think is most interesting about where we are, and this is what we were talking about before we started the interview, about the disconnect between commodity prices, producing company valuations, and then the juniors, is that some of these juniors with really high quality teams, assets, jurisdictional advantages, infrastructure, all these things, got a little bit lost in the shuffle. And so I look at this and say, back when we would have first started working together, before I was CEO, Maple was 150 million market cap when it had only 50% ownership of our assets and an $1,800 gold price. Today, we're 40 million market cap with a $3,300, almost $3,400 gold price and 100% ownership of the assets, right? Geology doesn't change. So to me, I look at it and say, we've got some room to claw back, but the mispricing of us is a bit different from...
Here's the other thing that hasn't changed. Your partner.
That's true.
When I look at projects around the sector, the first thing I do is I go to talk to some CEOs who may know a little bit of history. or I look at what the industry is doing, and the fact that Agnico Eagle are here still, they would have offloaded this if they didn't think this could be a mine. So they're looking for certain things from you, which allow them to get seriously interested again. So they haven't walked away. They want you to do certain things. We're sitting with 3 million ounces at Douay, right? You got to move that to what? And so therefore, tell me, what do you need to move it to? What do you need to do that? How much more time, money do you need to be able to express that?
Yeah. So 3 million ounces is a great critical mass to start with, especially when you own it 100%. It allows you to, as a company, develop things in a way that's going to benefit your shareholders and is responsible and all these things. So if we didn't, not that this is going to happen, if we didn't find another ounce here, as I laid out previously, we've got exploration strategy and we've got a concurrent development strategy. Both are taking place simultaneously. The thing that was interesting, I spoke with our partner yesterday here, and we talked a little bit about what would it mean for a junior company like us to put out something that may not be Agnico size in terms of a development scenario, but allows us to, get out of the sort of, serial dilution and needing to. So if you could self-fund exploration, and what would that look like? If it's 100,000 ounce a year of production or 150,000 ounce a year of production, it's a bit admittedly low for a behemoth like Agnico, but for companies like us that are looking to transition and to be innovative and to get into less of what typical junior companies do is just turn things into science projects and just dilute. We're always looking to raise our profile, show visibility on cash flow and NPV, de-risk the company, lower our cost of capital because we have such a big project. And that's the underlying theme. It's not just race into production so that you can get a re-rate on valuation. It is, think about the business as a whole. If this project, for example, would merit $20 million a year exploration programs, maybe instead of thinking about going out to the capital markets and raising $20 million every year, maybe you want to think about the things that can get you to a point where, you've got a valuation that supports raises, but you've also got visibility on being able to fund those programs on your own. Right. And that doesn't mean, and I think they're actually very supportive of, we're doing trade-off studies, for example, with some of the engineering companies right now on open pit versus underground, right? Within the 3 million ounces that we have. We're doing trade-off studies on, do we look at, potentially building a mill here at site versus utilizing some of the capacity in the region, including our partner, which has a lot of capacity, and they're willing to partner with us to try to find some solutions for that. And, we're looking at trade-offs. There's infrastructure in the region. So when I say we met with the Plan Nord, there's, restart operations with a new company that just picked up the Glencore assets in Matagami. There's a mill there, there's, a laydown area, rail, etc. There's a lot of things that we can leverage in terms of where we are, where if we had just made a brand new discovery in the middle of nowhere, it'd take years and years and years to try to unlock value because you need more government support for power, for roads, for all these other things before any of that gets unlocked.
I find it really interesting at the moment because, back in my banking days, we talk about alternative financing versus conventional, when times are tough, right? And what we're seeing is a lot more companies looking to today's version of alternative financing. And that can be simple things like, are we going to do some bulk sampling because I think we can extract a whole bunch of dollars out of the ground there, or we're going to maybe just do some DSO. Fine, no problem, in whatever terms. Or we're going to come up with a small starter pit and build from, if I got newfound gold, I'm thinking, having to do something like that. But many, many others thinking outside of the box, because it's been a tough environment out there. Conventional finance has exited left. And now
it's coming back, though.
It's coming back. And I would get that this sentiment is coming back. But the cost of capital is something that you constantly got an eye on. And I would also say, and maybe it may be true of you when you first came in here. It's like, well, we got to be in the game to play the game. We got to do whatever it takes to sort out the balance sheet, sort out the business plan, and be able to kind of be around to actually execute on the vision, right? So, how do you kind of view this kind of unconventional environment that we live in at the moment, and how can you maybe work towards a $20 million exploration budget if that was what you wanted to do?
Well, I think scale in this business matters, right?
Yeah.
So I think when, we've seen early run up of gold prices and we've seen some corresponding impacts, both of us are bankers, ex-bankers. So you can see how companies move and trade and their correlation to underlying commodity prices and see where the disconnects are. But it's undeniable that gold has tailwinds that are pushing it up to higher levels than we've ever seen, and we're not done yet. That I think the big potential pop, and I'm a student of macro, but I'm not a prognosticator, and we don't control the gold price. Obviously, we control running a good fundamental business. But I think if that next leg of growth, with the gold price and big pop and spike in gold price happens, which I think most people believe it's coiled spring, ready to go, it's going to still be a world of the haves and the have-nots. It's a tiered system of, capital will flow to the better quality companies, the ones that have more liquidity, and the ones that continue to sort of lag, maybe aren't as innovative, maybe haven't made the right decisions, or their operations have under-delivered, they're going to continue to struggle. And so what you don't want to be, if in that tiered world, you want to be a group and a company that's, leveraging all of your strengths and advantages. Obviously, this industry, especially exploration, is fraught with risk because, we drill a hole. The next expectation is the next hole better be as good, if not better, than that hole. That's not exploration, right? Exploration is you find a new zone, as we have with this Nika step out. It's 7% of the overall resource. We do a step out. We think we've got, thick, high-grade mineralization that's just scratching the surface of what the potential is at depth. We follow up. We do the same thing in the 531 zone with a model based on plunges that are backed up by what we're doing geologically, looking at core, et cetera. So without getting too deep in the weeds on geology, my view is the conversations we're having, including at this conference, with investors, with pension funds, with groups that are looking for exposure, that have seen the early run up in Agnico's share price and the majors gold price, but are looking for the right risk reward balance in the junior space because they want to put money and deploy capital to work. To me, that is the traditional financing, which I'm seeing coming back. I do think, though, if we take that capital, we just assume it's always going to be there, we're making the same cardinal mistake that juniors have for years, which is, the market inevitably turns, right? And the same companies that or the groups that you've depended on for financing in the past may not be there for 10 years. We think we've built and rebuilt a strong, long-term focused shareholder base. We still have a fair bit of retail, which again, I'm very sympathetic to the retail shareholders that are looking for those day-to-day price movements and returns. But we're building, as I said, with Agnico, with some of the funds that are looking at us, we're really looking at a long-term business model. And if we can get it within, I think a scoping study delivery at the end of this year, concurrent with a resource update, that really focuses on, again, as I said, some of these trade-offs of open pit versus underground. And then scoping study, positive decision on that would lead us into a PEA. And I think, look, the PEA, sometimes companies fail because they come out with a PEA, then they have to focus on that small mine plan. This is, remember, a big system. So we're never going to lose sight of the fact that there's Agnico-sized upside potential to the deposit. But because we own it 100%, there are things, thresholds, 100,000 ounce a year production, 10 years of mine life, 150,000, et cetera, that if at our 40 million market cap, we can deliver that in the next 18 months, that represents a significant de-risking and should result in a re-rate of the shares, right? In parallel with great exploration success.
I agree with that because I think that development capital, not talking capex, and talking pre-build capital is being much more selective. They are focused on fundamentals because I think there's been in that space a lot of learning, as we politely say, in the last 2 years. So the companies that will get. And the companies that fundamentally just don't have it, and the ones I think retail should start learning to avoid, will not access that capital. So it's interesting times ahead for the next 18 months for sure. I'm just, again, so conscious of time because you've got places to be. There's also the retail component to this, which is another step further. That's the next phase. So what are we doing on that at the moment?
We're excited about Jutel. I think Jutel has the potential to be another flagship asset for the company.
Former producer, right?
Former producer, 1.1 million ounces produced by Agnico. It's our first producing gold mine between 1974 and 1993 at 6.5 grams, so higher grade. And it produced profitably for 21 years at $300 average gold prices, right? We're, tenfold increase over where that was. So it makes a lot of that material that was left behind potentially economic. What's happening with the project right now is we've got drill targeting in place, we've got permitting in place, and we expect to come back. We've got a fully funded, we ran our 12,000 meter program at Douay. Instead of running it at $400 a meter all in drill costs, we came in at $300. Efficiency. So
That's insane.
proper controls of site costs, proper discipline.
Do you own the drills or something? No?
Pardon?
Do you own the drills?
We don't own the drills. No, we contract out, and we've used, because there's great service providers, they just have to be kept on task. So we built our core team.
Yeah.
It's like this dual prong approach. We build a core team, but we utilize existing labor and strong communities of. That's the benefit of operating.
I haven't
in
seen
Quebec.
numbers like that since pre-COVID.
Yeah, well, and this is the new norm for us. Is
Right.
investors should expect $300. We
Right.
based it off of what the previous team was doing. We're now doing it more efficiently. What does that mean? What does that translate to? More meters. So we went from 10,000 meters at Douay to 12,000 meters without spending more money. We just had additional budget capacity. And at Jutel, it's fully funded. We've got 3,000 meters that's already planned and budgeted.
Yeah.
I think it potentially could come in sub 300. We're getting quotes from the groups that are going to help support that drilling campaign. I would expect that campaign to start in the fall.
Right.
And this summer we're also doing a sonic drill program on the western half of Douay. So there's we got 16 more assays, holes to report on the Douay program. We've got summer field work coming. We've got a program coming up at Jutel. And then at the end of the year, we can expect a resource update as well as internal scoping study, which will start thinking and talking a little bit more about what we think is a potential go forward path for development for these projects.
It's exciting times in Canada. And I'll say this, I don't think all development stories are born equal, right? But I'll be kind and include everyone in the same game. But there's not a lot of them.
Yeah.
There's not a lot of them. They are being bought up, rolled up, merged all the time. It's a real sign of the times, I think.
I think the quality filter of projects and jurisdictions, given where senior company valuations have gone, the demand for growth, right? I think every quality development project in a good jurisdiction is on somebody's radar right now. And of course, what happens in these cycles is, admittedly, good managers and stewards of investor capital, they're not going to sell cheap. Right? If they think that there's more value to extract, they're going to stay with it and they're not just going to cash out. So I think it's a competitive market for the better quality projects. I think we want to be one of the leading development companies and exploration companies in the sector.
Yeah.
We've started to turn the tide in terms of getting people refocused on the exploration potential, on running a company efficiently. But when we continue to deliver and as we continue to deliver, I would rather see the slow, steady progress that we've made versus a big spike on a drill hole that just comes right back down. The gravity affects everybody, right? Yeah. So we trade volumes, we're trading up steadily, and we've got strong support amongst, not only our partner, but amongst the investment community. So I'm looking forward to what the next 6 to 12 months is going to be very exciting for.
And let's talk Canada. Let's talk Canada before you go, if you don't mind, for your time. Carney's come in. In fact, pre-election, post-election, talking a good game. We've seen, even if because your neighbours further south, executive orders being signed to expedite mining. Do you think Canada's going to be capable of that? I've just been on a panel talking about critical minerals, paths to success.
That. You did well.
Right? And it's quite clear there's a lot of holes in this thought, this vision. I'm not quite sure we can fix that overnight, but the intent seems to be there. What are the things that you would like government to do, whether it be provincial or federal, which will make it better and easier for miners to do things the right way, but get to the end product quicker? How do they do that?
Yeah, I think, as I agree with you, the will is certainly there, and the intent and the necessity for Canada to be a leader. This is the strength of this country. And I'm an American, right? But I'm also a Canadian now. So I choose to live in Canada. I believe that, the resources focus of the Canadian economy can make Canada one of the leading, economies of the world. But it has to eliminate, the red tape, the bureaucracy, the layers. I mean, you can't just eliminate it without a surgical plan. You can't just cut everything and expect it to be a free-for-all, because there needs to be, environmental stewardship. There needs to be protections. There needs to be benefits to local communities, to Indigenous communities, all of that. I'll give you a great example in Quebec. We're dealing with something interesting right now, which is the impact of the Quebec budget because of deficit, and things, and people's concerns about the economy on flow-through, right? So what used to be an advantage of operating in Quebec in terms of premiums for flow-through have been stripped out of the recent budget, right? And that impacts junior companies' ability to advance projects, with the benefits of, flow-through premiums. That's just a budget decision, right?
Yeah.
But it impacts a lot of people and it impacts a lot of companies, and it's not really necessary. I think it was almost a bit of an oversight. So, I don't want to speak, I'm not in the circles of power, so to speak, but I'm sort of paying attention to how it impacts a business like ours.
Yeah.
I would like to see, I'm seeing, obviously, Quebec has always been very supportive of, it's a big resources economy, lots of tax revenue coming in. I do think there should be a bit more proactive effort, for dialogue. I think I'm seeing the early green shoots of, the province is also taking a bit of the lead on, streamlining in BC, for example, where I live. We're seeing the EB government actually put more into making BC a leader in copper, in development of projects and trying to cut the timeline for permitting. Somebody asked me recently, how long do you think it's going to be before you put Douay into production?
Right.
I'm saying, well, if you just started from today, from the time you start to actually begin the permitting process to the time you actually, pull the first gold bar out of a project, I mean, average time is about 7 years. Right. So you can't just turn on and off production. I'm not saying it should be a year either, because it's a complex, process of consultation and making sure that it's done right. That's meant to also hold the mining companies accountable, right? Because it has been historically a dirty business. So I think you want to be a leader. You want to be a leader, as a country in Canada, we want to be leaders of responsible resources development. And I think that has to happen in partnership between government, between industry, between local communities, et cetera. So I think we're getting there. I think it's just like everything in government, the wheels of government turn slowly. That's just the reality. So we'll see what happens. We're optimistic, but great to see you. Thank you.
Good to see you, Kiran. Great project. I'm loving what you're doing, and I'm excited to see what you do in the next 12, 18 months.
Sounds good. We'll be back. Thanks.